I would have said, let's talk about the basic accounting when it comes to Forex trading, but I don't want to scare you guys. I don't want to scare you guys with accounting, economics, and no. So now let's just talk about the basic MT5 interface and the data and how you can interpret your data. So indirectly again, I'm going to come back again to say, let's talk about the basic accounting of Forex trading. So basic accounting is just what you're seeing here, nothing more. Don't think maybe this is rocket science, all right? So anytime you open your MT5 or your MT4 and you see all these figures, what do they represent? Trust me guys, trust me. If you skip lesson 1 and go to lesson 10, you still come back to lesson 1 because you need it to be able to make money. You need it. That's why when it comes to Godlove University, which is my institution where I teach people how to trade from A to Z, most people used to come in, they're like, I'm just looking for those holy grail strategy Godlove use, and they'll skip video number 1. And when they go to video number 10, they'll see that video number 1 was needed. So you need these Forex basics, guys. You need to watch to the end of the video. No matter how you ignore it, you won't understand any strategy and make it applicable if you don't understand these Forex basics. So if this is your first time watching me, or you've been watching and you haven't subscribed, make sure you smash that subscribe button below to subscribe to the channel, and let's get into the video. So anytime you open your MT5, this is going to be the same if you're on mobile, or the same if you're on a computer. You're just going to see it on a computer. It's going to be different, but the interpretation is the same. So let's start with the first figure you are seeing here, all right? So the first figure you are seeing here represents your, always, guys, always use the word, right? Always use the word, please, 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 please. So the first figure you are seeing here represents your floating profit. All right, your floating profit. Remember, I said floating profit, meaning that floating profit can be a floating loss or a floating win. So this figure you see here, at any time, if it's minus, you can see here this person was losing was actually in a loss of $0.8. So that was his floating profit of minus 8 cents. So that's why you always, guys, use the correct word so that you don't confuse yourself. So then if you hear somewhere and someone is saying anything extraordinary or extra from what is supposed to be, you say no, it's supposed to be like this. So this is called your floating profit. This floating profit can either be negative or positive based on whether you are either winning or losing. If the trade is actually a winner, you can see this guy was trading Great Britain Pound USD and he was down with minus $8. So the minus $8 is going to be reflected there. You can see on other screenshots like this, where you see profits upon thousands of dollars. That value actually represents my floating profit, which was above $10,000. This one again represents my floating profit, which was above $10,000. This one represents my floating loss, which was still more than $10,000. So that is why I'm talking about floating profit can either be a plus or a minus. Perfect. So let's go to the next point. Let's go to the next point. I want it to be as fast as possible, but at the same time, I don't want to compromise the understanding of this video with the speed. So I want you guys to understand everything. Now let's come down to the balance. So what is your balance? So your balance on your account, remember, anytime you deposit money, it reflects on your account. So let's just put here, I want a color that can be able to show very, very clearly, right? Let's change this color. I want which color can go on this background very nicely. Let's use this one. So this amount right here is the amount you deposit. So if you take $1,000 and you deposit into your trading account, that amount is going to immediately reflect here. That amount is going to be reflected plus the deposit charges, all right? So whether you are in profit or not, this amount won't change unless you close the trade. Very, very important. Whether you are in profit or not, this amount won't change, the balance won't change until you close the trade. Meaning, if you deposit $1,000 into your trading account, you press the buy or sell button, and you are up with $100. This amount here won't change. The only amount that will change will be you have $100 here on your plus. So you have your floating profit will be plus $100. Another thing that will change will be your equity. So your equity, we're going to be coming into that very soon. But the balance just represents how much you deposited into your trading account not including the floating profit. It only represents what is there at the moment, not considering the trades that are running. That is very, very important. Now, after talking about the balance, the next one closest to the balance is what we call the equity. So your equity is what? Your balance. All right? Your equity is your balance plus your floating profit. That's the formula, as easy as that. So your equity is your balance plus your floating profit. So in this particular case, where you see this person is down by almost about 8 cents, so what will be his equity? His equity will be now this $2,988 minus what? Minus his floating profit. So plus or minus, so just say plus or minus his floating profit, plus or minus your floating profit. So this one will be now your balance plus or minus your floating profit. So what's his floating profit? His floating profit is minus 8 cents. So this one will be minus 0.84, which is now what we have, here. So if you now put this will be now equal to 2987. So can you see? So the equity has dropped from 2988 to 2987 because his equity is what? Is his balance plus or minus his floating profit. Now let's do some math. Let's just assume this guy was up with plus. Let's change the color and let's just assume he was up with plus $100. All right. What is going to be his equity? Let's do the math, guys. I'm just going to give you 30 seconds. 30 seconds. Don't look at the screen. Do the math and let me know. So let's just say his floating profit was $100 plus $100. What's going to be his equity? So what's going to be the equity amount here? You need to understand these figures. Even when you're trading with a prop firm, trading with hundreds upon thousands of dollars, you need to know your basic accounting when it comes to trading. So what's going to be his equity? Now I've given you 30 seconds. Let's do the math. What's the formula again? Balance plus or minus floating profit. What's the balance? Balance now is going to be 2988 plus or minus floating profit. What is the floating profit? Floating profit is plus $100. So now his floating profit now, or his equity, is going to be now 3,088. I think so, because you just add the $100 to 2,988. So his floating profit now, or his equity. So his equity at this point in time will be what? Will be $3,088. If now he closes this trade, remember he's up with $100. If he now closes his trade at that particular point in time, that $100 will now go to what? Will now go to the balance. So his balance at that point in time again will increase by $100. So your balance either goes up or down if you close the trades on your floating profit. All right? So your balance will stay the same until you close the trade, until you close your floating profit. That's when your balance will either increase or decrease, go up or down. So perfect. So after doing that, let's clear that. So we've spoken about your floating profit, which is this one. We've spoken about your balance. We've spoken about the equity, and then margin. Perfect. So the margin is the requirement you need to be able to, okay, let's just take, for example, this trade is actually up and running, and this guy is down by minus 8 cents, right? By the time he's down by minus 8 cents, remember, he is trading by something here we call the lot size. Can you understand? He's trading with something we call the lot size. And with the lot size, there are margin requirements to use a particular lot size. Let's just take, for example, a mini lot, all right? A mini lot like what we are seeing. So a mini lot, so we have a standard lot. A standard lot is just one lot size of the base currency. We have a mini lot, which is 0.1, and we have the micro lot, which is 0.01. This one is equal to what? 100,000 units of the base currency. The mini lot is 10,000 units of the base currency, and the micro lot is 1,000 units of the base currency. So this guy is using what? You can see he is using He bought Great Britain Pound USD with a lot size of 0.12, meaning 0.12, he is using the margin requirements of, he is using 0.1, that's 10,000 of the base current, 10,000 units, then 2 micro. So that one will be now 2 micro plus 2,000. All right. So he is using a total of 0.0021. So this guy is using a total of 12,000 units of Great Britain Pound, or 12,000 units of the base currency. Now, for us to be able to know the exact margin he's using on this particular trade, we need to know the leverage he's using and also the account balance. Most brokers or most pro firms will give you a leverage of 1:500 or 1:100. Let's use 1:100 for example. 1:100 and he's having, let's just say, a $3,000 account, right? And you have a leverage of 1:100. It means your $3,000 account will be multiplied by 100. That's what is called leverage. Meaning your broker is going to borrow you 100 times that. So now his account, remember at the level of the broker, the volume or the margin, the total margin at the level of the broker at that particular point in time is 1, 2, 3, 4, 5. Meaning this guy is trading now as someone who is having $300,000. So that $300,000, remember with this particular trade that he's using just 0.12, he only required 12,000 units of the base currency. So that 12,000 units is subtracted from the total margin he had. As easy as that. This 12,000 units is subtracted from the total margin, which was this one, all right? And that 12,000 unit is represented in the dollar amount here. Remember, I'm saying 12,000 units of the base currency. So it's represented on the dollar amount here. So this was the dollar amount which was required for this margin to open this trade. As easy as that. This was the dollar amount which was required for this particular margin, which was required for this particular margin to open this trade. And for this, if the market goes up and down by 1 pip, this guy will be making or losing $1.2. All right. If the market just goes up by one pip or go down by 1 pip, he will be making or losing $1.2. Just multiply this by 10. You'll be able to have what, if he was using a standard lot and the market goes up or down, he will be making or losing $10. Easy as that. So that's what they call margin. Then the opposite of what I just explained is now your free margin. So from what I explained earlier, what's going to be your free margin? So your free margin is your available margin minus your used margin. So free margin is just going to be your available margin, which was in the dollar amount. In the dollar amount, your free margin will be now this amount minus this amount. So you have your free margin as this. In most cases, some brokers will show it in terms of percentage. So this is just a percentage. Meaning this guy, you can see, he has only used 12,000 of this. Remember, I'm showing, don't get confused, I'm showing in terms of the dollar amount, then I'm showing in terms of the unit. In terms of the units of the base currency, because you only get it in terms of the unit once you've already factored in the leverage, all right? So his leverage, he has only used about 314 in terms of the dollar amount, or 12,000 units when he was having a total of 300,000 units. So 12,000 units should just be like about 5%. That's why you see he's still having about 950%. About 950% of free margin. Remember, with this kind of margin, this person can open. Remember, to open a standard lot, to open a standard lot, you need 100,000 units of the base currency. And this guy is having 300,000, meaning he can open even 3 lot size. Can you see this? Meaning this guy can open 3 lot size on this account and the trade will still open without any problem. He can open 2.5 and it will still open without any problem. He can open 2 lot size and it will still open without any problem. And if he's trading with 2 lot size and the market just goes up and down by 1 pip or 2 pips, he'll be making or losing that $2. Remember, 2 lot size, if the market goes up by 1 pip, he will make $20. So instead of making $1.2, he is making $20 because he is using what? A bigger lot size. And you only be able to use a bigger lot size if your margin can permit you. And how do you know your margin? If you multiply the account balance in the dollar amount times the leverage your broker is giving you. Can you see this? That's Forex accounting. Forex accounting 101, which you need it even if you've been trading for 10 years. You still need to understand this accounting to your fingertips. So that is that, guys. So that's that about balance, equity margin, free margin, use margin, and all of that. So with that, I think we've covered these figures. Now let's go to now interpret this figure you're seeing right here so that you should be able to understand in detail the accounting, right? Good. So this figure you are seeing here, remember, it just represents the currency pair he is buying. Simple. It just represents the currency pair he is buying. And you can see he is buying Great Britain Pound USD. If you are selling, you see a sell. So he is buying Great Britain Pound USD. And what is the lot size he's using again? He is using 0.12 lot size. It's right there. And this even shows you the price. If you go on the chart, you see something like this. You see your chart like this. Let's just say you have your chart like this, and to the right you have those prices to the right. Then you have the chart like this, and this one you can see enter somewhere here on 1.3082. So this is where he actually bought. He actually bought somewhere here, and you can see the current market price, meaning there's already a take profit. His take profit is now somewhere at around 1.3094 something. So they can plot. So just from here, you can already know where he entered into that particular trade and where he's going for his target. So that's the interpretation of this small place you are seeing right here. So those are the basics of Forex accounting when it comes to trading. And trust me, ignore this. When you go ahead, you'll come back and learn this. All right, I learned this hard way when I was just trying to look for that holy grail system where I could start making money. And then when I went ahead and I said to myself, like, I need to master this. There's no other way around. So guys, take your time, watch this video as many times as you can, practice this, open your MT5 and see those figures there. Ask yourself how you can be able to interpret those figures so that next time you are trading you see a figure on your computer, you can easily know what is happening. And before I round up, this is something which has caused a lot of confusion, and it's just based on ignorance. Just based on ignorance. They say when people don't know, they talk about it, and when they know, they try to destroy it. All right. So it's just based on ignorance. You see someone will open a trade. All right. I'm just going to show you guys an example. He will open a trade, and here it shows the minus 0.84, and up here he will instead have minus 0.94. Can you see this? So here it shows that the amount here is minus 0.84, but here it shows the amount is minus 0.94. And these people write us, particularly for Lionheart Funding Program or those people who trade with Prop Firm, they write out on Discord, like, what kind of scam Prop Firm is this? I just opened my trade. You guys manipulated my trade. You slipped me to hair. I don't know where they where they read that one online, but they just use it all the time. You manipulated my trade. You traded against me. Failing to understand that as a prop firm, Lionheart Funding Program can never manipulate your trade because we don't have an in-house broker. We operate with 8cap that provides you with all the quote, and even as a broker, we don't have the permission, or we are not allowed according to the regulations to manipulate your trade. We don't even have that access. All right. So what is happening is by the time you press buy, oh boy, you have to pay the spreads. All right, you can see in this case it was minus 0.84 and it was shown here minus 0.84 because this was a spreadless. If there's anything like spreadless, meaning this broker didn't have any spread. There are some brokers that have zero spread, meaning the only thing you pay will be a commission. Meaning if you have an account of $1,000 and you press buy, let's just say you use one standard lot, they can charge you the price of one lot. In most brokers, they charge you $6 per round, meaning by buying and selling, by the time you buy, they charge you minus $3. And by the time you close that trade, they charge you again minus $3. So this is why they call per round, right? Good. So don't get it the wrong way. This is per round, meaning by the time you buy, they charge you $3. By the time you're closing the trade, they charge you again $3. Meaning by the time that person just click on buy or sell, what will happen? $6 will be deducted from this particular amount. Sorry, that is a broker that is always charging in terms of commissions. They don't have any spread. Most brokers are like that. I think IC Market, they have the raw spread account where you actually pay zero for spread. The only thing you just pay is the commission. This is a typical example. That's why this person pressed on buy, and he was down by minus $84, and $84 was shown here. All right, meaning the spread hasn't been factored in. But for some brokers that have the spread, anytime you press buy or sell, you have to first of all pay the spread. Meaning if you are down by minus $84, if the spread is 1 pip, that 1 pip is going to be factored in. Maybe that 1 pip is going to be $1 or $2 or $0.8 or $0.1. That $0.1 is going to be factored in. So I just put here assuming the spread on this particular currency pair was 1 pip. So instead of seeing this exact amount here, you see a higher amount here, because you have to factor in the spread. What is the spread? Just the difference between the bid minus the ask. So the bid price is the price you are ready to buy the currency pair, and the ask price is the price you are ready to sell the currency pair. So the difference is what we call the spread. And that spread is factored in anytime you buy or sell. That's why you'll be able to see a different value here, while you see a different value right here. It doesn't mean they've actually manipulated your trade. So with that being said, those are the basic accounting of Forex trading which you can't do without. Watch this video as many times as possible. Go on your MT5, practice this as many times as you can. And if you want to enroll in my academy where I teach people how to trade, we're going to go through the fundamentals of trading. We're going to talk about sentimentals in trading. We're going to talk about all the strategies. We're going to talk about trading psychology, everything to take it from A to Z. Then check out the link below to join Godlove University and be mentored by me one-on-one. Talking about a prop firm, if you want to trade with $600,000 up to $600,000, then check the link below to use my recommended prop firm. If you want to use my recommended broker, that will be able to give you nice spread, give you nice trading conditions. Also check the link below to use my recommended brokers. Check the videos that are going to be coming at the end of this screen because they are related to these particular concepts. Click here to subscribe to the channel if you haven't done so, and I will see you guys on the other videos.